We will continue to try new things essentially, because today I wanted the access to my mouse and I only have so many ports. So I've got my headphones plugged in, but this is the monthly market update for Fort Collins in Northern Colorado that we are looking at stats from the month of January. And this month we are going to look at three things: how the nation is doing in general, statistically, Denver, and Fort Collins, because I thought there was some relatively interesting kind of juxtapositions about how the nation's doing versus how our big metro is doing and how we are doing here locally, Fort Collins, which really drives the Northern Colorado market. Now, if you're watching this live, feel free to ask questions or comment that I can get to real time. If you are watching this on a rerun, feel free to comment in the section below and I will make sure to get back to you. But I'm going to start sharing my screen. And there was a housing market update from realtor.com for January 2025. And we're going to go kind of back and forth. We're going to jump right here. The total number of unsold homes, including homes that are under contract, 17.1%. And the total number of homes actively for sale was up 24.6%. Well, how did Fort Collins and Denver do? Well, our homes for sale was up 9.6% and up 52% in Denver, which is, definitely something to watch. It's not, that's not a number to shirk off. But from there, we're going back to the January housing market report. New listings up by 10.8%. And then newly listed homes increased 37.5% versus last month. We're not going to look about that. But 10.8% new listings this month, or this year, January versus last year. How about in Denver and Fort Collins? Up 31.2% and 34.2%. So we got 10.8% nationally new listings versus 31.2% and 34.2% respectively for Fort Collins and Denver. I really see this as a comfort level that sellers are having, that we talked about it, and we'll look at some of these graphs nationally. That's really interesting to look at, that you can literally watch COVID happen, interest rate changes happen in 2022, and how that affordability and inventory and supply had in fact impacted pricing and subsequent demand with very little inventory on the market. But what we're seeing is that since 2022, June of 2022, interest rates have been 6% or higher. So, come this June, we'll have been in 6% interest rate environments for 3 years. And we talked about it a little bit last month, but essentially people's lives happen and they are needing to sell for one reason or another. We talked about last year, generally, there was still those golden handcuffs that were happening, that people were only selling if they had to. Major life event, marriage, divorce, death, new kids, or empty nesters, retiring, major life events. There wasn't that voluntary, hey, I want to move up type of conversation happening often. Now, we just had a client event this last Friday, was awesome. So one, if you're a client watching this and you were there, thank you so much for coming. It was great. It was a great turnout. So many people from all over the country and world and here locally. They got to mix, mingle, make new friends. But one of our agents, Izzy, had a conversation with a client that, they're just looking to scale up, and they bought a house 2 or 3 years ago. And so that kind of voluntary conversation, sellers getting accustomed to these rates. Now, anybody who's bought in the last basically 2.5 years that has a 6% interest rate, that's just what they've known. But what we're seeing here with new listings popping up 31 and 34% is, I think people's lives are just saying, you know what, this is the new reality. 6% interest rates, hopefully 5% sooner than later, but 6% interest rates as it is the new reality. So sellers are becoming more familiar with that and okay with it to get their house on the market. Median price of homes down 2.2% versus last year. I thought this was really interesting. So I'm going to go a couple things, but let's go sales price. Fort Collins down 1.8%. Now, we're looking at both. Usually I just look at single family detached houses. We are looking at both attached and detached houses, whereas Denver was down 0%. I'm going to take Denver away right now, and I wanted to show our rolling 12 months for Fort Collins. Our rolling 12 months for residential detached was down 0.2%. I haven't seen that on a 12-month basis. We've either been flat or increased. So this is the first time on an annual basis that we have seen a decrease, which I think is, pretty significant. Here, you basically got June 2022 interest rates start to really increase to the 6s and 7%. And we've seen relatively flatlining for the last, 2 years. So I'm going to put Denver back in here real quick. We'll go both property types. Okay. What happened here? Both property types, Fort Collins. Oh, there we go. Okay. That's weird. I feel like Denver was 3% and Fort Collins was 0%. Interesting. It's weird. Let's try that one more time. Denver City. Weird. Oh, rolling 12. There we go. Monthly. Okay, there we go. Fort Collins down 1.8% and Denver flatlined versus last year. But on a rolling 12-month average, let's just see for fun what Denver's doing. Up 3.4%. So Denver's doing better than Fort Collins on a rolling 12-month average. Jumping into national. Homes spent 73 days on the market, slowest since January of 2020. I thought that was pretty interesting. Days on market for Fort Collins, 59 and versus Denver's 51. We're actually down 21%. We had a big spike, and sometimes that could be stat error, but it also just seems like that was a time where people were just very patient buying a house. So actually down, but Denver up 21.4%. So Denver kind of saw the opposite, that they had a spike here in January. We'll start to see that tick down. Residential detached versus attached, as you guys can see, there's definitely a difference there. 73 days for an attached in Fort Collins versus only 51 days for an detached building. Coming down, share of listings with price cuts grew once again. Now, I don't actually have this except for way down at the bottom. I'll show you at the bottom. Denver had 28%. I'll just get to it real quick. Metro area, Denver, Colorado. 20.7% of their active listings saw a price right here it is. 18% saw a price reduction, which is, a bit higher than the national average of 15.6%. So we are seeing more price reductions in the market. Now, interestingly enough, new builders, new construction, all had price increases in the month of January. D.R. Horton, Dream Finders, Hartford Homes, a local builder here, most of those developments had houses with price increases. So that could be a concern for material costs that we'll get to here in a little bit. That could be a reflection of the market. There was plenty of new builders, and man, it's crazy. We'll look at some of the stories we have during the COVID era, and then increased price, interest rates. But there's a lot of builders that just have, especially the Fortune 500 companies, publicly traded, Lennar, D.R. Hortons. If they sell a certain amount of houses, they're having a price increase. If it's a month, specific month, they're just going to have a price increase. Now, it doesn't mean that they're not going to have price reductions because they do want to move these homes. But it was interesting to see a lot of new builders saw price increases in the month of January. Okay, now we're going to kind of just focus on nationally, and I'm going to talk to you guys about how kind of different time frames and what happened. But here we go. I kind of want to just do total listings. Really is where I want to go. No, here we go. Active listings count. So here's COVID 2020. And essentially in May, June, that's when we really started to see a just plummeting of new inventory on the market. And then we jump into 2021, still is not helping us. 2022, though, we see interest rates starting to increase April, May, June, 6%. And then back into 2024, more homes sitting on the market, less homes coming onto the market, and fewer buyers because of affordability concerns. So, and then I'm not necessarily focusing on these 3 years, 2017, 2018, and 2019. They were relatively market normal. And I mean normal because we still had major, we've had, let's just put it this way. Like I said, I've in previous live market updates, never in my career, which I've been actively buying and selling homes for others, brokering deals since 2013, have we had more than 6 months of inventory. We did have that 2007 and 8, I think, got up to 6 months. But since that time, it's been 3 months or below. So it's been a quote unquote seller's market for many years, including these more normalized years. I'm going to skip total listing count. And I want to skip down to pending listing count, because this is where essentially, again, this is COVID, this teal blue line right here. And COVID happened, interest rates got cut, and buyer demand shot up, and it hasn't calmed down. Well, it has calmed down, actually. We'll get to that in a second. And then 2021, still same thing. People couldn't buy houses fast enough. And then in 2022, we get coming going. And then I closed an investment property in April of 2022 at 4.75%. I was mad about it. And then interest rates continued to climb 6, 7, 8%. And we could see a direct correlation to buyer demand just, really falling off a cliff. And then coming into 2024, which is a brown line, 2023 and 2024, you can't really see them, but essentially a more normalized bell curve of activity. So, nationally, we are a market that, is pretty seasonal. A lot of places are going to be very active in March, April, May, and June because, hey, school years, houses, lots of families want to own and live in houses. So they want to get into the house before the school year. So, and then obviously winter months, no one wants to, move during the winter, especially during the holiday season in November, December. So it's a more normalized bell curve historically, but definitely interesting to look at that demand for COVID happening, just spiking, and then interest rates happening in May, June, July, and plummeting, affecting affordability. Newly listed homes. So again, we're up 10.8% nationally. Fort Collins up significantly more, as is Denver. But nationally, we're up 10.8% for newly listed homes. And then again, here's this COVID line. COVID happened, people got scared. So all new listings came off the market, but then it said, hey, actually people are going to remote work and they're going to want to move. So then they shot right back up. And then in 2022, kind of more of a not normal curve, but pretty normal curve. Okay, days on market. I wanted to show that as well. Days on market, we're up 73 days, plus 5 days year over year. I suspect we'll see a relatively comparable year to this brown year in 2024. Days on market's going to dip down as we get into that April, May, June, more buyers on the market. There are going to be more sellers, but the buyers are going to be active and ready to go. And then it'll start to increase back as we get into fall and winter time periods. But we're at highs right now. It's a great opportunity. And I do have some kind of things that you can do and kind of breakdown of the market nationally and locally here shortly. Median list price is down 2.2%. So people coming onto the market, it's down versus 2024. So, we're talking with a lot of our clients that we're saying, hey, like homes are moving, but they've got to be priced appropriately. If you're looking to get top of the market, you're probably going to have to do a price reduction, or you'll be one of those 15 to 25% of homes that are doing price reductions if you're kind of shooting for the stars. And then here's kind of the price reduction, share. You can see, you're not really getting higher than 22% of the market, but it can get down to during COVID, 2021, no one's cutting prices. Everyone's buying houses in 2021. And then price reductions when the interest rates ticked up from 3s to 6s, everyone was having to do price reductions because it was just, if you're wanting to sell your house, which people who, we always talk about motivated sellers. It's always funny seeing motivated seller on a listing description because, honestly, I would definitely not take the time, energy, effort, both emotional and financially, to sell a house unless I am very motivated. We do this on a daily basis, and there is a ton of prep work, conversations, understanding, negotiations, time, energy. So, those people that were on the market 2022 and had those interest rates that popped up, well, really the conversation there is affordability. So if you want to sell this house with a new buyer who's not used to 6% interest rates, one way to quickly do that is by cutting your price. All right, that's kind of it. I'll leave this up. I'm going to leave sales price on here while I'm talking about kind of some things to think about. Let's see here. Price per square foot. Let's actually look at price per square foot because price per square foot is actually increased for Fort Collins, residential, detached. It looks like in Denver it actually decreased, but price per square foot, what we're seeing is houses that are actually, more luxurious. So somebody's coming in and paying a higher price per square foot than maybe their neighbor, but that house is totally turnkey, updated, ready to go. And smaller houses, more affordable houses are selling for higher prices and pushing up that price per square foot. So value in homes are increasing, at least here in Fort Collins and Denver, down 2.5%, but in Fort Collins up 3.1%. So while our median sales price dipped in Fort Collins, even on a rolling 12-month average, our price per square foot, the values of our home actually saw some appreciation. We've talked about the mortgage rate impact. A lot of conversations are going right now. I know there's a lot of pressure for mortgage rates to come down from politically, and it doesn't sound like right now that the Fed's remaining autonomous as much as possible. They did have a meeting recently. Rates remained unchanged with the outlook that, yes, we're going to continue to have fewer rate cuts than what was previously expected. But then there was a lot of different things that were happening, AI, DeepSeek. There was a flooding towards 10-year treasuries. And as the demand for treasuries increases, the interest rate that they have to pay decreases, which then, it does have an impact on 30-year mortgages. Well, not directly. That's kind of the main kind of barometer that we watch, that 10-year treasury. And they had quite a bit of a dip. And so we actually have seen interest rates over the last couple of weeks come down a little bit, but we're still in the mid to high 6s for most mortgage brokers. We're seeing estimates of 6.25 to 6.5, depending on if you're buying anything down. New builders are still offering incentives, 2-1 buy downs, and those conversations. And really what we're looking for, kind of our prediction, not predictions for the market, but what we're really watching are those interest rates. There was a time, let's look at, I'm sharing my screen, I believe. I want to share this screen with you guys for homes under contract, and I want it to be just Fort Collins because I don't know the Denver market obviously like nearly as well. And I want it to be monthly, and I want it to just be 1 year. So there it is. That's what I wanted to see because I want to show you guys blue. Let's see, here we go. There we go. Let's see if we can get there real quick. There we go. Okay, so interest rates, and we'll look at 6 months because really it'll get back to September. So interest rates dipped down in September, really pretty. I mean, we had clients locking at 5.75%, but interest rates were, not plummeting, but they were coming down in September. And you can see the homes under contract in September had a huge spike from August because it was immediately impacted by buyer demand. Buyer affordability immediately impacted the demand. And so one of the things that we're talking about with our clients is and what we're watching is interest rates. Because if interest rates do end up getting closer to the low sixes or high fives, there is going to be a flood of buyer demand. And we do have listings that we're currently preparing for that we're just still like, hey, let's get them prepped and ready for spring when the majority of buyers are on the market. But if something does happen, like we're ready to sprint if needed. So a lot of buyers are still on this. There's more buyers coming into the market, but there's a lot of buyers on the sideline. And, you can see here, buyer demand is up 14.3% versus January of last year. I think there's a lot of people itching to buy, and there's a lot of, what do they call them? Gen Z that are starting to make their way into the market. I'm a millennial, and now we're kind of old news as far as home buyers. We were, I think, the biggest home buyer demographic in history. And now Gen Z are kind of the focus of what people are doing. But some strategies for buyers and sellers, in 2025 and moving forward. Be prepared for continued competition in desired areas. There are homes that are turnkey, priced appropriately, and good neighborhoods that are seeing multiple offers. We had a competing situation a couple of weeks ago where Connor competed against a couple of different buyers, was able to secure, and I'll just put this back to sales price just so you can watch it. 3 years. There we go. That there are competing offers, and there was an above list price deal. It's fewer and far between, but understand the neighborhood dynamics, the quality of finish, and how they're positioning as far as the price of that home in that neighborhood. And then from there, make sure that your agent's having conversations with the listing agent to understand, hey, are there other offers? Are there threats of other offers? What do we need to do to secure this house? Now, there are plenty of homes that are sitting on the market and you're able to negotiate price reductions, concessions, be pretty aggressive on those, but there are still homes that are getting multiple offers. Again, if you're a buyer, I would say interest rates absolutely have to have a conversation, an impact on your decisions just because it's directly correlated to affordability. But if you're able to, and the mortgage makes sense, and your plans are to be here for probably at this point, still 4 to 5 years. It used to be like, you should only buy a house if you're planning to be there for 3 years. Now it's like, make sure that you're going to be there for 4 to 5 years. The last thing you want to be doing is stuck in this, let's just do it right here, stuck in this flat line of prices in Fort Collins. And if your goal is only to be there for 3 years, well, you're hoping that the market goes up quite a bit, over this next 12 months, because at 550 versus 555, you'll have some principal pay down and things of that nature, but you still have closing costs, commissions to pay for. And so we're kind of pushing more on that 4 to 5 years. If you're planning on being there, if you can afford the mortgage, I would be a little bit more interest rate agnostic because it's an opportunity right now. Whereas if interest rates do decrease, there is a floodgate of buyers that are waiting, willing to make moves if those interest rates just get down a touch. As a buyer, the look where others aren't looking mentality. There are still opportunities for homes that need a little bit of love, that need some updating, maybe, but you totally have to understand yourself and also the risk of renovations and things of that nature. So, we have some great resources and great contacts as far as vendors and technicians and things of that nature that can help on remodels. And I wouldn't say going full gut is what I'm looking at. I'm saying look for maybe bathrooms that need to be updated, maybe some kitchen remodeling, not necessarily pulling down walls or opening up things, but new aesthetics, cabinetry, countertops, flooring, paint, exterior paint, landscaping. Those would be houses where a lot of people aren't interested in it. They want to, what I like to call finance in their renovations by way of buying a house that's fully updated. That way they're paying for those finances over the next 30 years, comparatively to having to come into a home and you've already financed the house. And so either one, you're gonna have to take a home equity line out or refinance on the backside, or C, use your own funds, which can get a little tight when you're buying a high-priced home. For sellers, I think the most paramount thing that you can do as a seller is price your home correctly. And I say that while I've got 2 listings that are coming up in the next couple of months that we are going to be relatively aggressive on pricing. Now, I absolutely have those conversations if you're wanting to price aggressively, I would put that house on the market right now because there are active, aggressive buyers that want to make deals. But if you're going to be pricing your home on the higher side, wait till the buyers are there. But regardless, probably the most important thing you can do as a seller is price your home effectively. Don't have rose-colored goggles on while reviewing your house and price your house out of reach. From there, I think marketing your house is extremely important. We're working with a client right now who we haven't even been on the market, but they're pushing out their home themselves to their networks, to their individuals that they know. And I think there is no shortage of marketing that you can do. I do think there's appropriate dollars and where you should spend those dollars should be. And we love exactly doing just that with our listings, putting some dollars behind them, but getting them out there on websites, all of the syndicated websites, the MLS, professional photography, videography, but market your house appropriately. While that doesn't guarantee a sale, it might guarantee a few more eyeballs on that home that could result in a subsequent sale. And finally, if mortgage rates decrease, sooner than later, and if you're considering selling your house and interest rates do happen to come down a little bit and you've been waffling with the idea, well, that could be a great opportunity to capitalize on this kind of restrained buyer demand due to affordability and interest rates for the last 3 years. And this could be an opportunity to not fight against too many other houses and get on the market quickly. We recommend with our clients from the day that they call us, the quickest we can get a home on the market, we can get even quicker, but I would say the quickest we can comfortably get a home on the market is 12 days. And from there, what we really prefer is 30 plus days. I mean, we talked with sellers in October and then listed the home in March. Obviously, the more time we can get with you and develop this strategy and plan, we believe the more success that listing is going to have. But hey, things happen, divorces, marriages, kids, multiple kids. Oh man, I will say, a good friend of mine, he, is a very wonderful person, and they have a little child, and they were planning on having a second, but that second is now second and third. And they were hard on only having 2 kiddos. So talk about I would say a nightmare. It's a blessing for sure. But talk about tons of anxiety that I had when I was when we had our 2 kids, and I was like, all right, fine, let's do 3. But that idea of a 3rd and 4th, oh man. So, life events like that happen, and sometimes the space, isn't necessarily there, and you need to upgrade and make moves relatively quickly. Fortunately, that individual does not need to do that. But that being said, if the opportunity arises and you need to make moves and you've toyed with the idea of selling and interest rates do come down, be ready to move. Now, I didn't see many questions, or I don't have any questions right now. I just have a couple comments. What's up, Matt? Appreciate your comment, John. Thank you guys for watching. I'll give some time for questions right now if you guys desire, and I'll kind of go through some of the team dynamics that we've got going on, because it's exciting, and we've got more boots on the ground conversations. We're working with a ton of people right now that are, I would continue to call them discerning buyers. If the right home comes up, which that home that Connor offered on that had multiple offers was exactly that. It was a home in a neighborhood that was the neighborhood that these clients wanted and had been watching. And the home came up, and their plans weren't to buy until like August or September of this year, but they weren't secure in the idea that there was going to be a good listing in that neighborhood during that time. So they made the move there. And that's kind of a story for a lot of the buyers that we're working with right now. One I've got that's flying into town on Friday is concerned with new construction and the tariffs that are potentially, going to take place, and what new construction is going to do, and how that might impact builders and buyers and affordability. So we're actually going to shift our focus. We're still going to explore the new build community, because I think it's actually a really great community, but there are some concerns, and I think they're valid. I think anybody's concern is valid, especially if it does anything to your sleep. if a concern affects your sleep, it's worth taking into account and taking seriously. If it doesn't, for me, doesn't mean that that's not for you. So what I told this individual is like, yeah, if that's a concern, it's not nothing. And if there is a reason to explore other areas, let's do it. And we can have those conversations. But she is an individual that, can make moves if and when that time comes, and is extremely flexible. So discerning buyers are definitely a thing right now. Lots of listings. We're talking to a handful of listings, 5, 6, 7, 8 listings that are coming online. I'd have to count in the next couple of months, March time period after spring break, before April, really trying to maximize the buyer activity that happens. For those of you who are watching, from our perspective, but the reason why that demand picks up so much in April, generally right around tax day, is because if you kind of reverse engineer when that home's going to close, it's essentially when school gets out at the beginning of summer. And so there's a lot of people, partners, families that want to be in the home at the beginning of summer to acclimate while their kids are out of school, get to know the area, get involved with sports, activities, camps. And so there's a huge surge of new listings and buyer activity in late March, early April, and then all the way through to the end of June and into July. And then it starts to really peak out as far as our inventory. Let's see here, I've got you guys on the screen so I can show you guys this. Our inventory peaks out kind of in June, July-ish, right here. And then it kind of comes down and then peaks, kind of picks back up and into the next months and into the next cycle. So let's go here, actually. That's rolling 12 months. Here's better. Sorry, guys. So June, July, August peaks out. June, July, August, it peaks out. And then it kind of tapers off right there. But a lot of new listings come on the market, and that's why. So April, it's about a 30-day contract in Colorado. So by the time you go under contract after 5, 6, 7 days on the market, and then close 30 days later, that puts you basically at the end of May. And that's the reason why those are there. Got a few deals closing myself, hopefully a commercial deal closing. I don't do a lot of commercial. almost none. I almost refer all of my commercial business out, but this was very unique. I would say 95% of our transactions are residential and 5% are other, and 5% is being generous. It could be 2 to 3%, but this is a unique deal. Investor, very close individuals to me. So excited about that one to close. Original conversation to sell that deal was on October 31st. So, and we've been in negotiations, conversations, contracts since that time. And so excited for that one to close. I appreciate you guys watching. I have started sending out a weekly newsletter that I hope is valuable and informative. If you are interested in getting on that newsletter, definitely reach out, send me your email. I'll put you on there. We did just get a question. Is there a decent short-term rental market if moving for another state would like to temporarily rent while finding a house versus getting into a year lease? Yes, absolutely. We've got 4 different short-term rental companies locally that we recommend: Mountain Time Rentals, Carriage Houses, Eco Tenant, and Penta Homes. I do have links for those. If you would like, I could send those your way. And from there, you've got your big boys, Airbnb and VRBO. But Fort Collins does have ordinances on short-term rentals, so there's really not too many more popping up. But short-term in Colorado and Fort Collins, I should say, is anything less than 30 days. But we do have a lot of medium-term executive-type rentals with time periods of essentially they have to be 30 days, but they can be 35 days, 45 days. Lots of different opportunities. So if you're interested in that, JC, send me a message, email, or comment, and I can get you those 4 links to those local short-term rental websites. And then again, of course, you've got those VRBOs and Airbnbs. All righty. Appreciate you guys joining us. Well, me, not us on this one, but Rodney, thanks for joining, man. Excited to talk to you. Talk soon when you get here. All right. We'll talk to you later, guys. Bye.